Now, most of the times what happens when it comes to group insurance basically is the employer pays half the premium and the employee pays half the premium. So we were talking about the first one where we said that the employer pays the whole premium. And we said that in that case, then it's going to be taxable. Then we said, well, what if the employee pays the whole premium? How much? Well, how's that going to be treated? Well, that'll be tax-free. But like I said, in most cases, what happens in group insurance is the employer pays 50% and the employee pays 50%. So basically, the premiums are split 50-50. So here's a typical example. We've got Tom here. Him and the employer split $1,000 a year premium. So they both pay $500 each, basically. So 6 years later, what happens is Tom becomes disabled, and he's disabled for a period of 10 months. That's basically what it is. And during that period of time, remember, he's getting $3,000 a month, right? So therefore, during that 10-month period of time, he's got $30,000 that he actually received in actual benefit. So the question now comes down to how much of that $30,000 will in fact be taxable and how much will be in fact tax-free. So we go back to say, well, how much did Tom pay? Well, Tom paid $500 a year for that premium, and he paid it for a period of 6 years. Okay, so therefore, 6 times 5 is obviously a total of $3,000. So he's paid an actual fact $3,000 worth of premium. So therefore, that $3,000, so in other words, that first $3,000 will be considered a tax-free benefit. And the reason for that is because it's been considered a refund of premium. In other words, whatever Tom pays in, whatever that number is, in this case here, that number is $3,000 that he actually paid in. So the end result of paying that $3,000 is that he's going to get that money back. He's going to get that money back. So therefore, it's a refund of premium. Basically, that's how it's treated. So because it is a return base of his own money, obviously it's going to be tax-free. The balance of the money, however, the balance, which is $27,000 in our example, which again, remember that $30,000 minus that $3,000 which he got basically as a refund, you might say. So we got $27,000. That will be treated as taxable income. That's how they're going to do it. So a way of looking at it basically is that if you as the employee, whatever monies you've been pouring into this over the years, what they're going to do essentially is they're going to add up all those premiums. So when you become disabled then, say, okay, of all the benefit that you're getting from your disability benefit, how much of that was really a return of your own money? So whatever that adds up to be, that will be considered tax-free money. So because it's just, like I said, a refund of premium and that's it. But if you receive anything above the amount of money that you actually paid in, so excess earnings, you might say, those will be considered taxable income, and you will have to report those on your T4. Basically, in other words, you will have a T4 for that, which means you're going to have to put it into your T1, which means you have to pay your taxes on that. So basically, all we're saying is that anything in excess of your premium will be considered taxable income.